Welcome to Bias Breakdown. I'm your host, Kara Rucker. There's been volatility in the stock market since President Trump's tariffs went into effect. The media is reacting, analyzing, making predictions, and it's everything from a recession to a market boom. With so many different voices, let's cut through the noise. That's the focus of today's Bias Breakdown.
Join Straight Arrow News. See the slant, avoid the bias. When others skew the facts, we give you the truth down the center. Welcome to Bias Breakdown.
My fellow Americans, this is Liberation Day. And today we're standing up for the American worker, and we are finally putting America first. And starting tomorrow, the United States will implement reciprocal tariffs on other nations.
Last Wednesday, Trump announced 25% tariffs on foreign cars and auto parts, a baseline 10% tariff on all countries, and higher rates for countries that Trump called the worst offenders, countries imposing some of the highest tariffs, plus the value of any trade barriers on U.S. goods. In response to China's 67% tariff on U.S. goods, the U.S. is adding a 34% tax on imported Chinese products, on top of an already 20% tax previously implemented over fentanyl. That could go up by 50% this week because of China's retaliatory moves. That means China could end up with a 104% tariff. As for other countries facing some of the highest tariffs on their goods shipped to the U.S., Vietnam, 46%, Taiwan at 32%, India, a 26% tariff, and the European Union with a 20% tariff. All of these tariff rates are about half of the tariff rate being imposed on U.S. goods into their countries. Trump's tariff announcement came with plenty of coverage, with outlets leaning in. Fox News on the right touted the importance of Liberation Day.
Happy Liberation Day. Today, Donald Trump fundamentally changed the country as we know it. This is the biggest shift in economic policy since World War II, when we liberated Europe and Asia. 47 says we're now liberating ourselves from globalization.
5 American presidents helped dig us into this trade deficit hole that we currently find ourselves in, and only one, Donald Trump, had the guts to try to dig us out.
It is Liberation Day in America, and tonight we will shatter the myths surrounding Donald Trump's American First economic vision.
And networks on the left, MSNBC and CNN, calling the president's tariffs a bad idea.
And is there any positive take on this?
Well, I can answer the second question first. I don't think there's a single positive take on this. This is all just bad. It's bad, as we talked about before, for inflation. It's bad for economic growth. It's bad for everything.
Tariffs on basically the entire world will do what for the economy?
It will send it into reverse. Let there be no doubt about this. The president said today a whole load of economic nonsense.
24 hours after Donald Trump intentionally detonated a bomb in the heart of the most resilient economy on the planet, the sights and sounds of his failure to protect the American people's pocketbooks are everywhere.
These clips come from some of the network's top-rated programs with millions of viewers. We like to do these comparison sound bites, or as we call them, SOTs, to show the contrast in coverage on major news stories on some of the top-watched news programs in the country. So if someone were to only consume news from a network on one side of the political aisle, it's clear they would only get one perspective when it's clear there are multiple narratives. Now, most of the news coverage since Trump's announcement has been focused on the stock market. Let's go through some of the numbers first, then look again at the news coverage. At the close of trading Thursday, the first full day following Trump's tariffs, U.S. stocks closed in their worst day since June 2020 during the COVID-19 pandemic. The Nasdaq fell 5.9%, the S&P 500 dropped 4.8%, and the Dow down 3.9%. The next day, Friday, a similar tale. The Nasdaq fell 5.82%, the S&P 500 dropped 5.97%, and the Dow another 5.5% down. And when markets opened again Monday and closed for its third day after Trump's tariffs, the Nasdaq ticked up 0.1%, the S&P 500 ticked down 0.23%, and the Dow decreased 0.9%. The plunge is among the steepest of the last decade. The Trump administration said market volatility was expected. And as Trump was leaving the White House Thursday, Trump reiterated his stance that the markets will eventually boom from his tariff policy.
The markets today are way down, and we're staying here because of the tariff. So how's it going?
I think it's going very well. It was an operation, like when a patient gets operated on, and it's a big thing. I said this would exactly be the way it is. The markets are going to boom, the stock is going to boom, the country is going to boom.
And in the meantime, the president says, don't panic or be a panickin'. Posting to Truth Social Monday, the United States has a chance to do something that should have been done decades ago. Don't be weak, don't be stupid, don't be a panickin'. A new party based on weak and stupid people. Be strong, courageous, and patient, and greatness will be the result. Right-leaning networks have largely shared the prediction of a market boom, citing other economic factors that the country is currently seeing, such as lower oil prices, inflation, and a positive jobs report from Friday. All of these things are true. Left-leaning networks are largely highlighting the tariff turmoil could spin the U.S. into a recession, citing economist and billionaire outlooks that have raised the odds of a recession significantly since the tariffs took effect, which is also true. Like JP Morgan CEO Jamie Dimon, saying this is now the most perilous economic environment since World War II. Two different sets of information to come up with two different takeaways based on a news outlet's political lean and coverage. Take Fox News business hosts Maria Bartiromo, Charles Payne, and Fox News' Will Cain.
Rates are plummeting. Oil prices are plummeting. Deregulation is happening. You know, we've got all of these things happening. President Trump is not going to bend.
Oil was $76, now it's $65. Gasoline prices are going to plummet. Any other time, that would be the number one story. In fact, if you go to the polls, what will get you elected as president? Much cheaper gasoline or Wall Street crying? I'm just being honest about it, right? So, yeah, people have these stocks in their 401ks. And guess what? We've been through it. There's a correction on average every year. There's a bear market every couple of years.
Oil prices down, I think, about 15% since the announcement of tariffs. I would imagine it also matters to you when you go to the bank and look for a mortgage on your home. 30-year mortgage rates also, like oil, trending lower. The fundamentals of the American economy, including unemployment, look strong, despite the fluctuations of the market.
Meanwhile, MSNBC host Jen Psaki, CNN analyst Harry Enton, and MSNBC host Ari Melber shared these takeaways about a U.S. recession.
As for Larry Fink, who's the CEO of the world's largest money manager, BlackRock, he said today that his fellow CEOs believe we're already in a recession. And Mark Cuban, not exactly a Trump supporter, I know, but he's a legit billionaire and someone who calls it like he sees it. And he said that if the new tariffs stay in place for multiple years and are enforced and inflationary and Doge continues to cut and fire, we will be in a far worse situation than 2008. Worse than 2008 is very, very bad, to state perhaps the very obvious.
There's the market, but then there's the chance of broader economic problems. And that chance is right. That possibility is rising, right?
Yeah, that's exactly right. A chance of a recession, something none of us want to see. And what's the chance of a recession? I mean, JP Morgan, look at this, now up to 60%. It was 40% in early March. How about Goldman Sachs? It was 20% in early March. We're now up to 35%.
The worst could still be yet to come. The tariff failure risking a full-blown recession. The dumping of so many American stocks reflects what I mentioned, the combined views of many investors rejecting Trump's economic actions. Even some normally pro-Republican CEOs now warning this is the Trump recession.
It's likely you agree with one sentiment or the other based on your own political beliefs. Bias Breakdown is a podcast meant to break down the political biases in reporting. We all have our own biases, as some of you are upfront about in the comment section, which I can appreciate. And some of you also can appreciate getting a glimpse of what news people are consuming from the other side of the political aisle. Besides pointing out the different narratives, we like to try and steer you toward the facts we know and be honest about what we don't know. As of this recording, which uses data through Monday's closing as I'm scripting this Tuesday, markets saw $10 trillion in global value wiped in 3 days. The Nasdaq is in a bear market after falling 20% below its recent all-time high. The S&P 500 was down as low as 17%. The numbers are the worst recorded since the COVID-19 pandemic. High-profile recession outlooks have ticked higher since Trump's tariffs were enacted. It's also true that several countries are coming to the table, looking to negotiate. The European Union, Vietnam, Zimbabwe, Taiwan, and Israel have all offered 0-for-0 tariffs. Trump administration officials say as many as 70 countries have called for a deal. Trump saying Tuesday, South Korea has a top team on a plane on its way to the U.S. to negotiate, after Israel visited Monday. While deals are in the works, it's still unclear when Trump may accept any proposals and rescind any tariffs. As of Tuesday afternoon, stocks are recouping some losses, up across the board roughly 2.5% as of now. It's hard to cover a story about stocks because it's ever-changing. By the time the edits and graphics are in on this story, stocks could be even higher or have seen another dip. In summary, the stock market has seen its share of volatility over the last few days in response to Trump's tariffs. Left-leaning media are sounding the recession alarm, pointing the finger at Trump's policies. Right-leaning media are calling the market volatility temporary, forecasting a boom and giving Trump the credit. News outlets with a left and right political bias are picking the data and talking points to come up with stock market predictions that best fit their political narrative. And that's your bias breakdown. Thanks for watching this week's episode. If you found us on YouTube or social media, remember you can also find us on Spotify, Apple Podcast, and other platforms. It's a really busy news cycle. There's a lot going on, so it was hard to choose the topic for this week's episode. There's also a lot of different angles to the tariff story, but I had to narrow it down to the stocks, otherwise this episode could have been 2 hours long. A big thanks to Ian Kennedy, our video editor, and Allie Caldwell on our graphics. And thank you for watching Bias Breakdown, and I'll see you next time.